So here's the latest on the Credit Suisse news. Well, looks like UBS will be cutting as many 15,000 investment bankers, um, maybe by indefinitely. Don't know by how long or what the estimated time is. Now, this is kind of a surprise since when the merge happened, or simply when UBS acquired Credit Suisse, they said that no jobs are going to be cut, everyone should be fine, and now they're kind of going back on their word on it. So which causes a little bit of controversy, a little bit of turmoil, especially after a couple of sort of shady ways that this deal went through. So, just to give you a recap on what happened, UBS acquired Credit Suisse for $3.25 billion, which is roughly 10% of what Credit Suisse was worth 2 years ago, and about 30% of what they were worth last Friday. So a significant drop. Credit Suisse has had a bad reputation. They've been going downhill for quite some time, and I'll get into that in a little bit. But if you go to my article, you can check out the official webcast of how the whole deal went down. Essentially, what happened was that the Swiss government they knew that Credit Suisse was going to fall, and Credit Suisse was asking for some loans and bailouts and stuff like that. This comes on the heels of the whole SVB collapse and everything. And in fact, Credit Suisse and SVB were sort of linked indirectly in some ways. So that kind of trickled. So the collapse of SVB sort of trickled over onto Credit Suisse. And now Credit Suisse was facing some trouble and going to the government. And the government basically went to UBS and said, hey guys, can you please buy out Credit Suisse so we don't go through another collapse? And we cover our asses and don't look like a bunch of dogs with our tails between our legs. So UBS was sort of forced into this deal, and they did get some support saying like, hey, if you guys need money, we have about 100 billion or something like that in assets to cover you guys in case something comes up. So sort of to sweeten the deal, because really Credit Suisse had nothing to offer since they were basically plummeting, right? Their stock was plummeting. So essentially, UBS was like, okay, fine, we'll do this deal, not because we want to, because we have to save the Swiss economy, to make sure Switzerland doesn't look so bad. So they ended up buying out Credit Suisse, essentially, and now Credit Suisse can still operate on their own, but they're basically under the UBS umbrella. So here are a couple of details to take note of on that. I'm going just through this article here. So shareholders of Credit Suisse will receive 1 share of UBS for 22 and a half shares of Credit Suisse. The half is kind of funny. Just round it off. Just say 23 shares. 23 shares of Credit Suisse will be converted to 1 share of UBS. And, Swiss regulators say that the owners of the $17 billion worth of additional Tier 1 bonds are going to lose everything, essentially. So that's kind of sour. That kind of caused it a bit of a sourness. Another thing is that the shareholders of Credit Suisse were not notified, or no sort of vote or approval was taken. This was kind of like an emergency type of situation where they override that. Usually companies would have to ask and get approval from the shareholders before merging and all that kind of stuff. But in this case, that wasn't the case. They skipped that step and went through anyways, which kind of leaves a sour taste in the shareholders of Credit Suisse. And who knows, maybe they'll dump more shares. They may not want to have any more Credit Suisse shares, which we'll see what happens. So a lot of turmoil, a lot of things up in the air. But just going on ahead, a little bit of a history. So UBS shares have climbed 15% in the last 2 years and booked some nice profits, while Credit Suisse shares have fallen almost 90% and lost about 8 billion of profit, or not profit. They lost 8 billion essentially in 2022. Now, again, the Swiss bank says that it'll provide a $108 billion bailout or loan if necessary, to boost liquidity. And in terms of the upper management, UBS chief executive Ralph Hammers will be the CEO of the bank, while Colm Kelleher will serve as the chairman. So this makes UBS the world's leading wealth manager with $5 trillion of invested assets, and they have ambitions to grow in America and Asia. That was their original plan, and they intend to keep that plan, or keep that vision going. Now, like I said earlier, UBS did ensure that the employment and staff of Credit Suisse will be continued, but we just heard recently that they're announcing 15,000 cuts, employees cut, and most likely it'll be from the Credit Suisse side. And as I'll go through the history, you'll kind of understand why that may be the case. Now, this also comes on the heels of the Saudi National Bank saying they're not going to invest in the bank anymore, so that added on to the fire of Credit Suisse just going downhill and having to be bought out. Otherwise, they were essentially going to collapse. And this is, and on a side note, this is almost like two rivals buying each other, rivals, kind of working out and going together. It's almost like Man United being bought out by Man City or something like that. So these guys don't like each other, but UBS is like, oh, okay, all right, I guess we have to then. Sure, I hate you guys though. So essentially that is it. Like I said, the acquisition was done without the consent of the shareholders, which is a sour note. So the people on the other side, the regulators, all of them essentially are saying, hey, this is great. Thank you very much. You basically saved our asses and made us look good. We don't have to worry because we all know Switzerland is a big powerhouse. They're on the pedestal. They're kind of like the gold standard of finance. And if the world sees that Switzerland is falling, which essentially they kind of are, and it is pretty obvious that if they had to go through these drastic measures to save a bank or a couple of banks, then Switzerland is kind of teetering, and that doesn't look too confident in terms of the rest of the global markets. But these guys are saying, hey, this is great. This adds stability and everything like that. So here are a couple of things. So U.S. Treasury Secretary Janet Yellen says, we welcome the announcements of the Swiss by the Swiss authorities today to support financial stability. Okay. And then Fed Chair Powell says this, the capital and liquidity positions of the U.S. banking system are strong and the U.S. financial system is resilient. Wait, what did he say about UBS? Nothing. He went over to talk about the U.S. About the U.S. And the funny thing is that he goes on to tell people, hey, our financial system is resilient, we're safe, we're sound, which is kind of funny because why do you need to say that? And actually, funny enough, the chairman at the time in 2007, which I think was for Hank Paulson or someone like that, he said the same thing. He said, our banking system is safe, we're resilient, everything is fine, don't worry. Next thing you know, they collapse. So could this be a precursor? We don't know. Again, why do you have to tell us that the banking system is good if it already is good? It's almost like, why do you have to tell me you're strong even though I can see that you're strong? I get it. We get the point. You don't need to show off, right? So, and the president of the ECB says, I welcome the swift action and the decisions taken by the Swiss authorities. They are instrumental for restoring orderly market conditions and ensuring financial stability, which is kind of true. They are instrumental, but investors are smart. The market is smart. They're not stupid. When they see an action like this, when two banks have to merge together in order to avoid a collapse, they know that there's some cracks behind, and there are maybe some skeletons yet to be revealed. So, yeah, nice try. And also on the same time, on another note, the ECB just raised interest rates. So keep that in mind. Interest rates are starting to rise, which could mean we might see the curtains unveil a little bit more and see what else is going on in the background, because it's almost like a tide. When the tide starts to pull out, we start to see who's been swimming naked. Now, if you heard of that quote before, let me know in the comments who that quote is from. So going ahead, the Bank of England says that they welcome the measures taken by the Swiss authorities to support financial stability. And they also went on to say that, hey, our banking system is solid as well. There's nothing to worry about. Again, why do you have to mention that, right? So, and now some commentary from the other side, from some outside sources, but still influential. Former chairman and CEO of Goldman Sachs, Lloyd Blankfein, says that while some banks have been hung up by poorly managed concentrated risk, the overall banking system is extremely well capitalized and substantially more tightly regulated than in prior challenging times. I guess we're going to find out. We'll find out soon enough if that is the case. And senior investment strategist at Allspring Global Investments, Brian Jacobson, says that provided markets don't sniff out other lingering problems, I think this should be pretty positive. So, yeah, it's hard to say that whether they're being paid to say that or not, essentially, but we'll see. So, like I said, this may not come to a surprise given the history of Credit Suisse, which has been losing the trust of investors. So, a lot of investors and customers were not happy with Credit Suisse leading up to now. In fact, some bankers left Credit Suisse and they went on over to UBS, their competitors, which is kind of funny now. So it's like, oh, hey, I remember you. Welcome back, neighbor. Funny enough, actually, speaking of neighbors, their offices are really close by. They're within like 1,000 meters of each other. So they're in the same vicinity, essentially. Right, so Credit Suisse even financed Alpine Railroads and Silicon Valley's development. So they were a huge part of Silicon Valley essentially. So the fallout of Silicon Valley trickled over and affected Credit Suisse, essentially. So here's some other things to note of, other commentary from some smart money investors, people who are on the outside and kind of are sort of unbiased and know what's going on. So president of Bianco Research, Jim Bianco, says that seriously, if everyone truly believed that the capital and liquidity positions of the US banking system are strong and the US financial system is resilient, why would they have to tell us? Exactly what I mentioned, right? Exactly as before. Why would they have to say that? Are these words enough, or do investors want to see Warren Buffett writing checks to regional banks in the next 2 hours? And speaking of Warren Buffett, the CEO of Berkshire Hathaway had been in talks with the Biden administration in recent days over possible investments in the battered rat regional bank sector and offering his advice, meaning that he could be writing out some more checks like he did back in the financial crisis of 07, 08. So could that mean something? Who knows? Dow Trading Options Academy School founder Simon Rhee says, I don't think that there are any direct consequences for US investors, but it's extremely negative for sentiment if a major Swiss bank fails, hot on the heels of the SVB, SBNY, which is the signature bank in New York. The market will be wondering what's next. It could start to have the optics of a global banking crisis rather than an idiosyncratic failure of a niche U.S. regional bank. So yeah, this could be something more. This could be signs of perhaps more to come. We shall find out. It's hard to say. So other things to take note of is that Switzerland currently manages $2.6 trillion of international assets, though that number may be flawed because if UBS has $5 trillion, then maybe a little bit more than that. So this kind of like means that Switzerland may be teetering in terms of, the financial powerhouse out there in terms of financial centers. Now, other financial centers to take note of that have, been doing well and that are pretty stable are Luxembourg and Singapore, which have increased rapidly over the recent years. So if you're looking to invest in some, some global emerging markets, do your research and you may want to consider those. So while politicians and regulators have been putting on a brave face, it seems as though the once looked up upon Swiss banking empire could be losing its reputation. Exactly. So especially with the takeover going along without the approval of shareholders, once again, that's pretty sour. You can't do that. So let's talk a little bit about Credit Suisse's rocky history. They've had some pretty not so sunshine times. One of them being in 2015, where in the aftermath of the 2008 turmoil, Patrice Lesaudron began dipping into a client's account in order to win back the losses of other customers. So essentially, he just went into a wealthy client's account. He saw some losses in one account. He went into this account, dipped it, and made it seem, okay, we're good. We're fine. The problem here is that even though Credit Suisse found out about it, it was documented, supervisor said, hey, this is a red flag, what's going on here? They didn't do anything. They didn't convict him of anything. They just let it slide, essentially. And then after a while, he was convicted of fraud in 2018. And unfortunately, the guy took his life in 2020. So yeah, that's sad. Yeah, what's next here? So this one here actually stood out quite nicely. That shows kind of what's going on behind the scenes and sort of like the politics and kind of shady stuff. So a long-running feud between CEO Tidjane Thiam, if I say that right, Tidjane, and Iqbal Khan. Iqbal ran wealth management, and he was looking to basically go up and lead Credit Suisse. He wanted to be one of the main leaders or kind of like CEO or chairman or look into that, right? So he kind of didn't take things. He kind of was like a little bit of a kind of like a sore loser. He didn't take things nicely because certain things that were going on. He actually went into a dinner. He went to a dinner and opened up and actually like just released and just kind of like party crashed the dinner and started talking about all the shady deals, all the mishaps, and unethical things that were going on, all while this like dinner was happening between like a lot of wealthy and the Credit Suisse staff, essentially. So because of that, he was passed over for promotion, to no surprise, obviously. And then after a while, he actually went over to UBS. Now, Credit Suisse, the managers at Credit Suisse were a little bit worried and worried because he might be, giving out some trade secrets to UBS on Credit Suisse and stuff. So because of that, they hired some security to go and spy on Khan over at UBS, and Khan found out about this. In fact, he got into some fistfights with some of the people there, so it was not so pretty. So things like that is what made Credit Suisse not look so good. And even if you look at the charts, they've been going downhill for the last 2 3 years. So it's almost evident. Usually a lot of the times the charts do tell a story. A lot of what's going on is priced into the charts for the most part. So keep that in mind. So that's basically what you need to know about Credit Suisse for now. By the time you hear this, you might see more news. There might be way more out there. So this hopefully covers this article. If you want to learn more, check out the article. It's a full article. It also shows you ways on how to protect yourself. Because if you are considering investing, here's another thing I got out of this as well, is that when you're investing or not even investing, but putting your money in banks, these banks are not actually holding your money. They're not in a tight account and your money's not there. We saw this with SBVB, essentially. These banks are using your money and leveraging it and investing or sometimes risking it in the markets. And sometimes these risks work out. Essentially, these trades work out where they end up making money and things are fine. But there are times where it doesn't. And when it doesn't, it's bad. And a lot of times your bank account you may not be able to withdraw your bank account or money from your bank account. Now in the States, there is the FDIC insurance where any account under 250,000 is covered. You're good. You're going to get your money. Anything above, you're basically risking it. So here's the thing: even if you do lose your money, and that it may take some time to get your money back from the government, essentially. So rather than going to a bank, this is why I suggest going with an investment bank, because your funds are in a segregated account, meaning that if anything happens, your funds are protected. That company or that platform, that broker, whoever it is, they cannot touch those funds. They're protected, essentially. So you get that protection. On top of that, some of them offer up to $2 million of insurance, meaning that you get covered right away, and they're regulated by international laws. So not just the US or a certain jurisdiction or a country, but multiple countries. For example, I'm just going to throw this out there, eToro, they have a segregated account and they're regulated by not only the States, but Australia, the UK, Europe, all these, high tier, top tier financial regulators. And there's some accounts, for example, IBKR and others, they pay high interest in savings accounts, such as 4% or more sometimes. So you want to look at those options, especially segregated accounts. It comes down to protection and being regulated in multiple jurisdictions. So do your research. If you need some help, let me know. Leave a comment below. Leave a comment below. Check out the article. There's some cool resources, some useful tools. There are other articles that will help you learn how to invest wisely and what to do in a time like this, because we are coming to some really interesting times, similar to 2008, maybe similar to 2020. Who knows? We'll find out. So take care, stay safe, and cheers.